to the multi. Significantly boost industrial appetite and returns if they were to come out and get their food. We hear a lot about this contemplation about the lack of credit facilities for banks in the marketplace. Banks are very actively putting out term sheets. We've seen very few executions, or at least heard of very few large executions to date. I would love to see Freddie Mac's thing approved. I think the politics between its approval or not, I think the politics is that their policy is to lean back Freddie and Fannie's market share. They'll never go away. They'll always be a meaningful player. They have to be a meaningful player in order to maintain stabilized prices. But I do think if Freddie Mac's program for financing SFR in bulk were approved, I expect that will be a catalyst to prompt banks to come out and make those larger credit facilities available in larger volumes and numbers to big institutional investors. I think to date, the banks have been a little skittish to date, and I think they're getting over it relative to the infrastructure available to manage these assets if they would have to foreclose on a portfolio. I don't buy into that apprehension because the leverage will be relatively modest. I'd be shocked if it got above 50%. I just don't see a portfolio going bad for a bank to foreclose on a 50% leveraged portfolio. I'll make a couple observations relative to the difference in the financing that's being offered by the plan proposed by Freddie Mac and that which is available in the private sector from banks today, or at least they're talking about in floating term sheets. What you see in the private sector is portfolio financing being offered as either mezz financing or corporate level financing. You do not see any plans for the banks to offer financing secured by first position deeds of trust on the homes. That would be an inefficient execution, but that's the only execution that's going to be available from Freddie Mac because they have to have first position deeds of trust to secure their loans. However, I think we may see that the rate Freddie Mac can offer being meaningfully lower than the rates we're hearing banks offer. So the big question about whether Freddie Mac's facility will be successful or not is the delta between the private sector rate and Freddie Mac's rate larger in interest rate than the transaction costs that we associate with recording a first position deed of trust on the homes, going through the brain damage of doing it, the recordation taxes, the title insurance policies, lawyers' fees, and consultants' fees, and everything, and then going through the same brain damage to release these things over time. I think if we get over the politics about weighing down the position, I think approving it, again, could be a catalyst, a meaningful contribution to bolstering value in the marketplace, and I'd love to see it.
All right, I think we're out of time. Thank you very much. Thank you to the panel.